What's going on with the stock market? Why are stocks selling off so hard, especially tech stocks? Now, Palantir earnings are out. I'm going to go through those. But before we do that, let's talk about why stocks are selling off so hard. And is this a buying opportunity? I've got you covered. And I'm editing this into the video because I do also discuss Nvidia and if it's a buy or not towards the end of this video. All right, you can see the Russell 2K closed down 3.6%, NASDAQ 3.43%, S&P 500 exactly 3% at 5186, and the Dow Jones closed down 2.6% today. Now look at that VIX. You can see it's at 37.33. It closed up about 60% on the day. At one point, it topped 65 on the VIX. Now, part of the reason for this, Japan stock market dropped its worst since Black Monday. That was in 1987. And more on that in a second. Before we do that, I want to show you the quick heat map. You can see just how bad it really is, especially in tech names. Nvidia down 7.23%, Apple down almost 6%, and so on. So we've been talking about recession signals. So last week, we had several different signals. Number one, unemployment rate spiked 0.8% within 12 months. 4.3%. That's the highest reading since 2021 October. The SOM rule also triggered. The yield curve is starting to normalize after its longest period of inversion. And then we've had persistent weakness in manufacturing output, employment, and really the consumer just starting to crumble. Now, none of those things guarantee a recession, but the data definitely supports the possibility of it happening. What's going on today is you take all those issues we just discussed and you throw Japan on top of it. So basically, investors were able to borrow money at next to zero interest from Japan. And this went on for many years. And what was happening is basically investors were taking that money and investing it elsewhere. So taking cheap money next to free money and getting higher yields elsewhere. So huge sums of money were involved. And this is what we call a carry trade. The sudden spike in the JPY versus the US dollar, well, that's a problem. It basically blew up that strategy and it forced many people to liquidate. This is similar to what happened last year with Silicon Valley Bank and others, some of those smaller banks, but that really dealt with bond yields. This is a whole different level because it deals with many different asset classes. Now, Bitcoin tumbled from 62,000 on Friday to 52,000 on Monday. Europe was down 2.2%. You can see here again that VIX as high as 65, and this is the highest since early days of COVID-19 pandemic in 2020. So that's just a quick snapshot of what's going on in the market. Next, I want to talk about Palantir earnings, and I'm going to tie it together and let you know if I think any of these stocks are worth buying, including what everybody's been asking about, Nvidia. So even though mega cap tech erased $1 trillion of market cap today, I do have some good news because Palantir is up 15.5% at $27.80 after hours. You can see a beat on the top and bottom lines, beat by 1 cent on EPS, and then the revenue up 27.2% year over year, beat by 25.71 million. Closed 27 deals over $10 million. Some impressive growth here, and we've talked about this many times on the channel. You want to see that growth in the commercial segment, 55% year over year. That's very solid growth. Only 6% quarter over quarter, but that 55% number is very nice. Government revenue still growing, still very healthy, 24% year over year, 8% quarter over quarter. So the combined metrics here are 27% year over year and 7% quarter over quarter for revenue growth. US commercial customer count grew 83% year over year. This is what we want to see, and 13% quarter over quarter. Margins are looking pretty good, and then the adjusted free cash flow, 149 million, that's 22% margin, and GAAP EPS grew by 500% year over year to 6 cents. Adjusted EPS grew 80% year over year to 9 cents. So of course, AIP, Artificial Intelligence Platform for Palantir, that we've talked about many times on this channel. Some great case studies in here. What's really nice to see about it is 16 days to 7-figure 2-year deals. So they can get these deals done very quickly. So a quick snapshot on the financials. You can see this US commercial remaining deal value is 103% year over year, and the US commercial total contract value up 152% year over year. So when you look at GAAP net income, that's a nice trend upwards. Rule of 40, they're showing 64%, which is a very solid number for Palantir. 64% on that rule of 40. Love to see that 55% US commercial revenue growth, and then 33% is total, which includes global. Government about the same, 24%, 23%, and then that total growth here, 27%. So continue to invest aggressively in AIP and the US while driving operating leverage at scale. Nice numbers here as well. Margin 37%. This is really the money slide. This is US commercial customer count, 83% year over year to 295. AIP is definitely working for Palantir. So 96 deals of at least $1 million, 33 of those deals, $5 million, 27, at least $10 million. And sitting on a whopping $4 billion of cash and cash equivalents. You can also see full year 2024 raising revenue guidance as well as US commercial revenue guidance. So these are very solid numbers from Palantir. It's up about 15% after hours. And we're going to look at a chart here in a second. You want to know, is this a buy at $27.30? Before we look at the technicals, one thing that makes it really hard, and this is tough, it's anchoring bias. And this happened this morning. If you didn't buy right away at the open and get those really good prices, the rest of the day you're sitting there thinking, oh, well, it was just 21.23 this morning. I don't want to pay, $23 or $24. Well, of course, now up 13.3% at $27.50. That 52-week high, it just got to almost $30, $29.83. So it's getting pretty close again to that 52-week high here after hours. I do think there were opportunities in the market, especially this morning when the NASDAQ was down over 6% at open. It was kind of an interesting flash sale that really a lot of those cheap prices got gobbled up pretty quickly. That's always tough as a long-term investor. It's very hard to time those. You can't beat yourself up if you didn't time that perfectly and get the very lowest price. And I do think there's still some risks in that this could linger on for a little while. So you could see some of these names have volatility over the next several weeks. The economic data is going to be very, very important. So a few key charts here. This is QQQ, the NASDAQ 100 ETF. Now, on Wednesday, we had chart day. Usually that's going to be in orange, previous chart day. We said this is the first bearish reading we've had in a long time. Either bottoms at the 100-day or we're going to see something between 416 and 434. The low this morning was $423.45. So you can see it got below the 200-day moving average, but not quite that orange line, which is the trend line. Now, when the QQQ was up here at $500, we circled this and said, here's the possibility. You're above all the moving averages. You're above the Fibonacci pivot points. You're above the trend line. This is a possibility of where it could go if the market sells off. So the fact that we got down past the 200-day, close to the trend line, that's generally very healthy, especially if you want kind of a reset for the market to go higher. So at the open today, the QQQ is actually down over 15% from its 52-week high. So when you get over 10%, you're in correction territory. Of course, if you get to 20%, you're in bear market territory. We didn't quite get there, but we got pretty close. The S&P was down 9.71% at its lowest. Now, a correction, of course, is 10%. An average correction for the S&P 500 is usually 11.8%. So you can see on the S&P 500, the VU, that we broke the 100-day, but didn't quite get to that 200-day moving average, that purple line. Now, looking at the SMH, not only is this the 100-day simple moving average breakers club, but also the 200-day. It just missed the S3. The S3 here is $198.06. It bottomed out right around $200 today. And of course, the trend line is quite a bit lower here, around $175. One last ETF I want to show you. This is the Vanguard Information Technology ETF, the VGT. The blue line here is the trend line. Of course, broke that. Broke all the Fibonacci pivot points, and it broke the 200-day moving average. So we actually did add this as a new position today in the community portfolio, trying to stack up some more ETFs. We bought this not the very lows of the day, but around 515 as a starter position. Before I look at Palantir's chart, I want to show you Nvidia because a lot of people have been asking me, is Nvidia stock a buy here at $100 a share? Of course, again, this morning you had this flash sale of $90.79. If you could have timed it perfectly, it probably would have been a good buy in hindsight. And this was playing out very well in the circle. Of course, when you have the whole market take a dump, you've got a leg lower. Now, if you look at this is the 200-day moving average. This is down here at $81. The S3 is about $85. So we didn't quite get to those levels. Looks like it bottomed out here at $90.69. That was the very lowest, and it is up 1.2% after hours. Now, as you guys know, I'm long on Nvidia since $3.91. I've been trimming. Everything I own is house shares at this point. I still think Nvidia is going to be $150 plus a share, probably towards the end of this year, if not next year. But of course, if there's a recession, all bets are off, not just for Nvidia, but for all growth stocks. Of course, earnings are going to be important. You've got the Blackwell having a little bit of a delay. There's lots of drama there in the stock. I mean, get real, guys. The stock, look at where it came from. This thing was down here January of 2023, December of 2022. It was $13.88. That was, after the split, that's the price. But $13 to 140. I mean, it's not unusual to see a pullback when you have a very violent move upwards, a parabolic move. And so we said we expected something like this, but it could easily go below $100. And here it is. It went under $100, now post market at 101. I do think this is a market leader. So if the market decides to be bullish and go higher, I do think that you'll see Nvidia go higher as well. Of course, earnings are going to be very important. You're even going to have SMCI earnings before Nvidia. There's going to be drama with this. It's not going to be probably just a V-shaped recovery back to all-time highs. So Palantir, this is tough because it went below the 200-day moving average down here at $21. This blue line right here, this is going to be your trend line. So it broke the trend and the 200-day, but then it closed, way up here in post market. It's way up here in the blue line. So, I mean, this had a violent move upwards from 21. It closed at basically $24.09, and now it's almost $28 in the post market. So there's probably going to be a lot of woulda, coulda, shoulda today on Palantir. I could have bought it at 21 this morning, and now it's almost $28 up here. I prefer this stock down here. We've been saying for a long time, we really prefer Palantir under $20 a share, but it probably wouldn't happen. Try to buy it at the trend line around 22. And you've got this R3 up here at $32. I do think if the market stays bullish, that Palantir will break $30 a share this time. I think you could see it extend into something like $35 a share. If you're new here, make sure you subscribe to the channel, click that bell for notifications. And if this video is helpful, drop me a like, drop me a comment. Have a great rest of your day. Take care.